Steve Hagenbuckle, he's a real estate expert. He's also the managing director of TerraCap Partners. Steve, good to have you with us. Thanks for coming in. I know you've been working all week lining up new deals. What's the story right now in residential real estate? Is this the time, do you think, if people are looking to go and buy, should they be doing the footwork?
Real estate is extremely localized, as we all know, so it differs from market to market. But overall, now is a very good time to be looking and potentially buying. The key here is to respect the timing and the cycles. So if you understand the cycles and you respect them, you can do very, very well.
Now, we've talked about the cycles in the past, that the cycles for residential real estate are not exactly the same cycles that are experienced right now in commercial real estate, right?
Correct. Commercial always lags behind residential. Remember, on the build side, you need rooftops before you can build commercial. And then on the downside, when residential slows and spending slows, commercial gets hurt afterwards. But when we look at the real estate cycle, let's focus on residential, because that's the area right now that's ready and ripe to buy. The cycles typically go 7 to 8 years, peak to peak or trough to trough. So the key to investing and timing your investing is understanding when to buy and when to sell. Now, the typical up cycle is 4 years and the typical down cycle is 3 years. The key is to buy at the turn or right at the beginning when prices are starting to go up at the bottom, and sell during that up cycle, which is a 4-year period of time to 5-year period of time if you want to play it safe. Never try to predict the top, and never hold during a plateau or a down cycle. If you do, you will compromise your returns. So at TerraCap Partners, we make sure that we are always selling our inventory the second we own it, and we're selling on the way up. We sell at the top or before we get to the top, because we never really know when that is, so we're always actively selling. And then we get out and we sit on the sidelines during the plateaus and the down cycles. You have to have a lot of discipline to do that, but we've been doing it for 3 cycles now. And if we go back 40 years, those time frames that I just shared with you have been consistent for the last 40 years and 4 cycles.
Now, in the deals that you've been working on, your counterparties to a large extent have been the banks, right? Because they're the ones who have been holding a lot of this real estate developments. In the case, let's say, residential real estate developments, whether it's, hundreds of units or the land for hundreds of units. What kinds of options do the banks face right now when they're underwater? What are they looking to do? What are they sort of coming to you with?
Their options, unfortunately for them, are very limited. The situation is that the regulators, FDIC, as well as OCC on the banking side, impress upon a bank that if you've got a bank or a loan that's in default, let's say 60 to 90 days, it has to be moved into a bad loan bucket, if you will. And then you have to follow that move with putting loan loss reserves from your profits or past profits to protect that risk or that exposure.
Now, you can go back, like 5 years or so to sort of match the losses on that loan to past profits?
Yeah, if you are let's say a developer like Lennar, and you sold property at a loss and you made profits over the last 5 years, prior to that, you can take a chargeback against previous profits to offset that loss. So it's not as bad as it looks on the surface, but regardless, there's a lot of money that's being left on the table, and that's where the opportunity is.
What about right now when you talk about the banks? I mean, are they really willing to deal and make the kinds of negotiations that will come to fruition?
Yes, I mean, we had a situation occur just last Friday where a bank was putting together a large tape of properties that were in default that they were going to sell in the private equity environment in a big block, hundreds of millions of dollars. We were able to come in, meet with the bank, selectively look at the properties that we were interested in. One property we identified, and we acquired this loan that is actually maturing today. It was $11.1 million principal balance on the loan, and we got it for $1.75 million. So this made our investors at TerraCap very happy.
Talk about the appraisal process right now, because that is something that goes on continuously, and that's a very important piece of actually realizing some of these returns, right?
Correct. The challenge, though, on their appraisal process, at least over the last 3 years, and depending on the market, it's been a moving target. So these appraisers have also come under a lot of scrutiny, and there's a lot of new regulations involved with regard regards to appraising properties, because in a falling market, it's tough to appraise. So the challenge on the banking side is that now the appraisers were appraising too conservatively, which made it look like the values were actually less than what they really were.
When you go back just to the banks for just a moment, you know, when they take a hit to these loans that they're having to sell, what does that do to the other assets in their portfolio? In other words, should we get ready for some problems in small and regional banks for the loans that they still hold?
Absolutely, because what happens is now you've created the new comp. That's the new value in the market, and if they have similar loans of that type, their whole asset value just went down. And they've just set their own comp. So it's a double-edged sword, and certainly a catch-22.
Talk, if you can, about the health of the market right now, because in fact you make the point that there are demographic issues that are making it better for the housing market.
Right. The demographics depend, you know, basically on where things are happening. But right now, there was another recent interest rate move that came down. The demographic draws, which we know people are going to the south, to the sunshine. Internationally, things are becoming much, much more attractive. So let's say someone couldn't afford a $400,000 house before. Now let's say that house is $200,000. Buyers that weren't ready to buy before are all of a sudden saying, I need to get in now because I may never see this opportunity again. And that's not only domestically, but it's internationally. So what's happened is it's had a big impact on the inventories to come downward.
Another function of the weak dollar. All
Correct.
Right. Thank you very much. Steve Hagenbuckle, Managing Director at TerraCap Partners, giving us some insight into the world of real estate investing. Thank you.
Welcome.
Coming up, if housing can turn the corner, what about online?